The stock of the day, and that's TCS. While you're not seeing too much of a reaction, but bear in mind TCS share price has already fallen 20% from the beginning of the year. Now, Q4 numbers were subdued. There was a modest miss on the company's top line. Margins contracted more than what the street would have liked. So the company's top line has declined in Q4 by 0.8% on a sequential basis. Margins are a bit of a worry. Margins have come in at 24.2%. 30 basis points down quarter on quarter. Year on year, margins are down 180 basis points. You know what the street would have hoped for? Margin expansion. Because if you remember TCS, the whole year was getting a lot of revenue from BSNL. BSNL was seen as a low margin deal for TCS. But now the incremental revenue contribution of BSNL is coming down. So therefore, that should have boosted margins, but that has not played out despite there also being a rupee depreciation. So the street is a bit concerned about the margin performance. That said, the macro uncertainty weighed. We had a chat with the management. We did that interview. They said the decision-making cycle has started slowing down since the month of February, which impacted growth in Q4. They've seen some sporadic, project delays, decision-making delays, but there is no major ramp down or project cancellation or even tightening of the budgets. The company also said that they believe FY26 will be better than FY25, at least for the major markets. And last year, according to estimates, the major markets grew 1.2%. But due to the uncertain environment, the company will decide on the wage hikes. So they're not giving wage hikes effective 1st of April, as they always do. The company will decide on that. Now, UBS says the company is currently, TCS share price is now 9% below its long-term multiple. There is comfort on valuations, which is why they have a buy call. Ambit, on the other hand, believes that the current market price is still very expensive because Ambit says the current market price, prices in an 8% top-line growth. And we all know companies and analysts expecting 2-3% kind of a top-line growth. So, Ambit has a sell call on TCS. Jefferies has a hold, and they're expecting only a 2% revenue growth for the company from FY25 to FY27. JPMorgan also neutral. They're saying that, because there will be a lower contribution from BSNL, FY26 growth will be affected, and therefore, TCS will underperform peers like Infosys and HCL Tech. But the company has a very strong capital allocation policy, and that will be supportive, especially in a low interest rate environment. So therefore, investors could flock for safety to TCS. So mixed picture, JPM is got a neutral call on the stock. In fact, we will, we will slip into a very short break on that note. We'll come back and talk commodities. Stay tuned. Don't go anywhere.